Good afternoon, everybody. We're doing this for educational purposes, just as a minor disclaimer. I'm a CTA commodities trading advisor, and I have the Series 3 FINRA and 65, soon to be a registered investment advisor. And so I just want to just put forth that we're doing this for educational purposes, and we're not soliciting. We're not making any actual specific predictions or, advising anybody to make a certain investment or whatever. But so that's what we're doing. And it's good to be with you guys. And so here we are in this ongoing market of drifting down days. And it's really, I think it's appearing to be somewhat quite bearish. You could look at it that way, with the network selling at lower tops, et cetera. So I thought what we could do is, there's so much to talk about. I mean, about technical analysis. I'll start off by saying, what I usually do when I start looking at a chart is that I'm looking to make sense of the structure of the chart by looking for areas of confluence and using Fibonacci analysis or Elliott wave analysis, and sometimes even planetary theory. But I don't think we're not going to get into all that. I just want to start sharing, some charts I've been looking at for the past couple of days, if you will.
Yeah, Leslie, I don't know if you mentioned it, but you also sit on the board for the Chartered Market Technician exam, right?
Right. Yeah, I'm a Chartered Market Technician, and I have been, for years, I've been grading the level 3 exams and writing questions for levels 1 through 3. And I'm considered what they consider a subject matter expert. I've been doing grading for 10 years. I've been a subject matter expert for the past 5 years. The name of the organization is the Market Technicians Association, located in New York, and it's an international organization similar to the Chartered Financial Analyst, CFA organization, only the technical side of the market. As you know, the CFA has a lot of accounting and the like, and but what we do is extensive program, levels 1 through 3. Perhaps you've heard of it. Anyway, so I just threw these, I'm just sharing, to start off by sharing, what I've been looking at for the past couple of days. And, again, to me, what comes up for me when I start talking about technical analysis, I start thinking about, to me, time is as important as price. But we're not going to get into time today. We'll just talk about price. And so, I'm always looking for areas of confluence, because that's where the market will, as you know, that's where the market will turn, more likely than not, whether it be pivots or, So what I did here is I just drew these lines here, just from the points in here, looking at this area in here on the 1 minute, and that's from yesterday. And then, here we have 60 minutes. And I just drew Fibonacci lines from up in here, down here to the bottom. Again, looking for areas of confluence, which we do see in here, which I was thinking is the last chance to hang in here before it starts caving in, and it did. And I want to say that, it's still hanging in here, but again, we're it's looking bearish. Well, let's see. What else do we have here? There's the daily, and I'm drawing a line here called an access line. I'm going back, looking at these points in here and here, and looking at this area in here, which is could be referred to as somewhat of a reverse head and shoulders, but and then we come in here, and so we're up in here now. But it looks, looks like it's topping in here. By the way, you guys should just make any comment you want too. I want this to be like a free and loose kind of meeting. Just have fun with it. And this is an interesting point. That is to say, this is the FTSE 100. What I like to do is look at it periodically throughout the day, because our markets, commonly or many times, not every day, but it's not very unusual. And there's somewhat of more than a middle, kind of almost a high probability that we will follow what the London market does, the FTSE 100 does. So I like to, they're 5 hours ahead of us in New York, and I like to look at it because, if I'm thinking, wondering, for example, what did the London market do at 12:30 our time or whatever. I like to see what it does because at 2:30 in the afternoon, if I'm saying to myself, if the London market closes, on the high end or low end or whatever, they're probably going to come in with programs here in New York and Chicago and push the market up or down, whatever. So it's just another thing to look at, and you can get this by just going to the London Stock Exchange and get it. It's free. It's free. So it's a good thing to be aware of periodically throughout the day, especially if you're intraday trading. But if you want to know where the markets are going intraday, the FTSE 100, it's a good thing to be looking at. And that's what happened yesterday. That's where it closed on the high end. And then here's the 10-year Treasury note. Fibonacci again. And then I just drew, here's the dollar index futures. It's looking like a big triangle in here, which, as you know, once it comes down in here, it's probably going to break out either to the downside or the upside. Again, gold, and here's gold futures at a 50% mark. It's looking, as you can see, they're looking pretty bullish here. For somebody who wants to speculate in gold, I mean, to start buying in here once it gets above, gets above this point, especially above 1290 on pullbacks. And then here's crude oil. Again, that's using Fibonacci here again, looking at these access points along here, which is something definitely to be aware of. I'm going to stretch this all the way back here as well. And IBM, that's a few more stocks. UTX, Disney, more Fibonacci, and Cisco drawing. Here's a good trend line right here, and Triple M, GE, more of an access point right in here, along with the trend line here. This looks like a buy at this point. HD, WMT, and here's another XOM, more Fibonacci. Looks like a big reverse head and shoulders in here. Came up here. Now it's just waffling around. CAT, Apple. It looks like a top in here, huh? There's Tesla, money Tesla. More of an access line across the top of here. AMD. And this could actually be a buy in here, this NUGT, this gold company. Baba. Facebook. More access lines. Kind of a sell here at 140. And here's XIV. And that's about it. I'll go back to today. what I was looking at today. Let's see. I think there's some new people. Let's see.
Yep, there's a few. Hey, Andrew, did you have a comment? You were going to say something?
One of the things that caught my eye today is that we've had 2 bear trend days in a row in the E-mini and some of the other stock indices, and that's a short-term change in behavior. We haven't seen that in a little while.
Yeah, it's such a great point. It's so true, isn't it? I mean, it's starting, the argument could be made. It's rolling over. I mean, let's see.
I mean, the thing I always look for is follow-through. And, we had a bear trend day yesterday, and now today we've had, follow-through. We've had another good bear trend day.
Yeah. That's such a great point. Here today, from 1 minute E-mini, let's see. I'm trying to see here. Let's see. Oh, here we go. I'm just promoted some more people. So here's the 1 minute E-mini, which I threw Fibonacci over here, and then here's the 50% bar in here, and it's interesting, Fibonacci, isn't it? I mean, it's some people make fun of it, and but as you know, so many traders look at it, so many institutions look at it, and you have to wonder, why are they looking at this? I mean, because it's just it's a great way to. I'm going to get into this much deeper, next Saturday and onward on Saturday. I'm going to try to do it on Saturdays, the beginning next Saturday. But the point being, just on the surface, it's something to think about. It's there's so much symmetry in the market, and as technicians, we're always looking, for greater, clarity regarding symmetry, and also looking for areas of confluence. And as you can see here, I mean, drawing the simple bar from here to here, down here, there's something to be said about this coming across the 50% point here. I mean, and then all of a sudden you see the market come up here, and then it pulls down. I don't think that. I mean, some would say that's a mistake, or there's nothing to see there, but there is actually, and it's just it's as you know, people are many traders, the big money, that is to say, they're looking at this, and let's see, okay, and here we go, and here's again a 60-minute, and it is like you were just saying, Andrew, it's here we're rolling over in here. It's starting to look like. I mean, if we go through 23.28, that's really going to start getting down here on the lower end again and heading towards 22.80. Before you know it, they could crash down in there. And here's the daily. Again, here, what do we have here? Yesterday, we got this bar down yesterday, and at this point, when I did this, we have an inside bar inside of this prior bar, which is showing a lot of indecision, with the close of the bar towards the end of the bar, which is bearish. They're showing more supply, and so here, and here's the London again. On the morning, early this morning, FTSE 100. You can see that they opened up higher. And then they're drifting around in here. Never really made, and here they are at 11:20 in the morning. So it just gave me an indication of where's the market going today. It's just drifting sideways. They sold off on the open, and it's just drifting sideways into more going into the day, if you will. And here's the 10-year Treasury note again. More Fibonacci up to the 50% point. Dollar index futures. Gold futures. Gold is creeping up. Once it gets above 1290, that's going to be looking, and gets back up to this point in here. it's going to be looking pretty bullish, actually. Yeah, I guess one of the reasons is, needless to say, that as you know, there's all this talk of Saturday and Korea and with this, 6 nuclear tests that could be occurring in Korea on Saturday, which is why many of our Navy vessels are over there with submarines and the Vincent aircraft carrier, et cetera. Anyway, so and then we have oil. Oil's as you know, oil does follow gold or vice versa. There's an intermarket relationship, not all the time, but I would say for a significant period of time or significant points in time, they do follow each other. And here we see it again. You can make that argument. And then more stocks. And they're looking pretty bearish. These significant blue chip stocks. Look at that. Selling off right there the day before. I believe it's closing on the low. Yeah, closing on the low. Not looking bullish. This is looking somewhat bearish too. UTX. I just drew these lines up here to the bottom. These axis lines for the trend. Triple M looking bearish. I do this Fibonacci up here. With DA. Apple. Again, looking bearish though. Here, look at this inside bar here. Real indecision. And Goldman Sachs. And as you know, Goldman Sachs has been leading the market. That argument could be made. Especially lately, when Goldman was going up, the market was going up. So now this is not looking good. This is starting to look like a shoulder, head. Another. Now it even can't even get the shoulder again up here, which is looking pretty bearish actually. What do you guys think of it? See that?
Yeah, I'm curious what other people in the group use for technical analysis. Obviously Fibonacci, but are there other indicators or things you like to look at?
Yeah. What do you guys use?
I'm a big fan of just bare bones charts. I don't use any indicators at all. I just try to look at the price action and try to figure out who's in control of the markets. Are the bulls or the bears in control of the markets? So,
yeah.
I'm looking for trading range days and trend days, and when the market breaks out of some sort of trading range, is it going to fail or is it a strong breakout? With follow through, because right now the last 2 days in the E-mini, we have what looks like it may be a successful bear breakout.
Right. Oh yeah, we see right here. Let's see. Right. Look at that. It's the daily. Yet today, and look at that. Yeah, it's looking pretty bearish. You could. If you're doing Elliott wave analysis right in here, you could say this is a 1, 2, 3, 4, 5 up. You could say that was 1, 2, 3, 4, 5 steps in the 3 wave, and then you could just say, look at this 5 up, and then A, B, C down in the corrective phase. If you're looking at that's one way to look at it. Like an A, B, C, and this could be within the context of C, A, B, C, and something like that on the 60-minute. And, it's so important, as you know. I'm going through these charts right now, but it's so important, as you know, to be looking, looking at various time frames, looking at the 5-minute, looking at the 15-minute, looking at the 60-minute, and the daily, and really looking for areas of confluence that are cross-referencing between say 4 time periods. It's so important not to just be looking at one time period, when you're if you're intraday trading or whatever with futures or whatever. You gotta be looking at, and of course being conscious of what the monthly is, the weekly is, and trying to draw, similarities, dissimilarities between the various time periods, and looking for areas of confluence that roll over into more than one time period, because that's where you're really going to find your significant resistance and your significant support points in terms of price. But I'm just going through, again, through these for now anyway. There's XL. Look at all these charts. They're all looking bearish. I hate to say that, but Goldman Sachs, XOM, it looks like a big reverse head and shoulders in here, which should have taken this point and this point, and multiplied it up, from here, that same width here above this and going up, into here. But no, what did it do? It came over here and it just rolled over. It just and came back up again. It can't seem to get going. And Walmart's looking like it's trying to get up there, but and that's another thing too, because all these stocks, they're obviously they're influencing the index. So you could be watching all these stocks, and they'll tell you intuitively where the index is going to go as well.
Can you go back to that Walmart chart?
Yeah, sure.
I look at that Walmart chart, and you have a bull trend from the November bottom, and if you draw the bull trend line connecting the November and February and May lows, it broke that bull trend line back in September, October.
Right.
And now the rallies since then haven't been able to make new highs.
Right. Look at that. That's so true. That's so true. Which is not good. Walmart, right? And then I guess, earnings started today, right? We'll see what happens. It cannot get through that high. Can't get. If you go all the way back here, it just can't get above there. Not a good sign. I don't want to sound negative, but you're sounding negative. You agree too, right?
Yeah. Walmart is pushing up against the old high now.
Right.
So you want to see, does it fail there? Because if it fails there and turns down, that would be pretty bearish.
Oh, absolutely. And look at that. It'll be the fourth time. 1, 2, 3, 4. Just can't get going. It's probably not either. It's probably it could be a short. If you trade like that.
Goldman Sachs looks even worse.
Doesn't it? Where is that? Is it back here? Let's see what I'll do with that. Oh, here it is. That looks horrible.
Yeah. You look at Goldman Sachs. It broke the bull trend, and then it rallied up to a new high and failed. Right.
Oh yeah. And now it can't even. It's so weak. It can't even create another shoulder over here either. It looks like it really does look like it's failing, doesn't it? It does. Sad but true. Look at this October low. My God. It's.
There's a lot of air there.
It's so true. So true. Let's see what. Facebook. Even Facebook. That looks like a short, doesn't it?
Yeah,
I mean,
Facebook just broke the bull trend line. I'd love to see Facebook go back up and test the high and fail, because then it would be an even better sale.
Oh yeah, right. It's so true. Oh, absolutely. And Google, that's not. I don't know. It's not looking too great. No, it's not. I mean, here it is. You know, broke out here. Now it just came back to test it, and now it's fading down. And yesterday again, another inside bar. All this indecision. Typical. I mean.
Yeah, the Nasdaq has been the strongest index too.
Yeah. Oh yeah. And now Amazon, the mighty Amazon, it's coming over. I mean, that's I don't know. It's of course it broke out here, but and all I did was just drew this trend line, below, and then with the access line. Tesla, look at that, came down, closed on the low. I don't know what it ended up doing today. It's probably lower. Have to look later tonight. But it did roll over. Rolled over, another rollover. Baba, another inside bar. Starbucks, another one on the downside. And there you go. Look at this. So what are you guys' thoughts? Do you have any on where the market's going now? Anybody want to share what they think? Anybody there?
I think Amazon, broke below that previous low today.
Right. Oh, did it? Yeah, that would. I bet it did. Let's see. Well, I could go back a couple of more days too.
I think it made a low. What was it, like 2 or 3 days ago? I think it broke below that low today.
Let's see what it did a couple of days ago. Yeah, there's the E-mini 2 days ago. And that's looking, there it's trying to, it's hugging up there, etc. What do you guys? What else do you guys look at?
I don't know. Capital discussions is really a big option traders, area. So,
right, sure.
There's probably less emphasis on this sort of thing. Option traders tend to concentrate on.
Oh, I know. It's non-directional.
Yeah.
And I do that. Yeah, sure. Oh, absolutely.
I mean, we're probably as much, if not more, interested in the velocity of what the market's going to do rather than where it's going.
Right.
Because
sure.
Volatility is so key to the trades that we do.
Right. And it certainly has been picking up in the past couple of days. right? I mean,
Yeah, it strikes me that the behavior we've seen over the last week or two is almost like what we saw right before Brexit, where the market was kind of going sideways and volatility had a big push up, and we saw the same thing recently.
right, absolutely. Oh, absolutely. I mean, let's face it. I mean, it's been for months. There's this air of complacency, and now, really, in the past 48, 72 hours, it's really starting to change, huh? Precisely along the lines of what you're saying. I mean, in terms of the volatility, which is something to be concerned about in the option world, needless to say. I mean, next week. I mean, who knows what's going to happen this weekend? It could really sell off next week. What do you think? Think that's possible?
Well, there's definitely some nervousness in the market. One of the interesting things is that not only has volatility gone up, but usually when volatility goes up, the skew in the market goes down, but this time the skew went up. The price of far out of the money puts has actually gone up, whereas normally it actually goes down. So it's an unusual situation. There's a lot more fear, it seems to me, in the market than is warranted so far strictly by the price action.
Right, absolutely. Yeah, well, there's, I mean, as you know, we've been in this, alleged Trump rally, and with all these international issues, I mean, that are coming to bear, it's not helping matters, and and we're due for a pullback. Let's face it, right? I mean, you think so?
Well, the market's due for more than a pullback. I mean, we're overdue for a recession. This has been, one of the longest, so-called recoveries we've ever had.
Oh, I know it.
And considering how mediocre the recovery is, it's pretty surprising.
Yeah, it's pretty shocking, isn't it? Oh, absolutely. It's amazing how it's so true. It's amazing how long it's going on. And if you look at this chart, you can see that it's kind of like a reverse head and shoulders in here, like one shoulder, and reverse head, and it's run its course actually, because as you know, you're supposed to measure from here to here.
Yeah, just eyeballing it, I'd say we're pretty close to the target of that pattern.
Yeah. It's true. It's and in terms of time too, you think about it, like the time it took to get from here to here is almost the time that it takes to get from here to here. It's like right in there, right? I mean, that's kind of interesting, isn't it? Look at that.
Yeah, if you take that trend line that you drew and then do the reverse channel, it looks like it touched the top of that, maybe even overshot.
Right. Yeah. Oh, it's true. That's interesting. I mean, it's interesting to look at the time it took to go from here to here, and now what does it take, to go from here to here? It's like kind of in there. It's like, it's just another way of looking at it.
At the very least, it's at the top of that channel, and it should come back down and test the bull channel line now.
Right, exactly. Yeah, it should. I mean, at least, I said, yeah, I could easily see it going back to 2280. Right? I mean, like right in here. In the not too distant future, perhaps, maybe. What are your thoughts? Do you agree?
I look at that chart and it's in a strong bull trend, and it's in a channel. It looks like it hit the top of that channel, and so far, every time it's hit the channel, it's at least gone sideways, if not come back down close to the bottom of the channel.
Yeah.
And it looks like we're due to, at the very least, sort of go sideways to down for a while.
Right.
And that's the most bullish case I can see right now.
Exactly. Yeah, it's true.
And the bearish one would be, coming down another couple of 100 points to at least test that bull trend line.
Right. Oh yeah. Oh yeah. Because if you if you go bar by bar in here, it stuck its head up here, came back again, stuck its head up here again. Can't seem to get going up in here. And then you have several days of kind of like inside days in here. It's just, just no momentum to the upside. So like you said, sideways to the downside.
From the last high, you have a textbook ABC correction down into that March low.
Yeah.
And from there, we've been making lower lows and lower highs, but I think it has to go below that March low to me before it starts looking bad.
Right.
But
right.
It looks like it if I had to guess, I'd say it's probably going to do it.
Yeah. I mean, as you know, earnings have so much to do with it too. And then we're just starting the earnings season. So we'll see. It probably won't be that good. I mean, and that combined with the international issues. I mean, But like you said, it's a classic ABC correction coming in here, formulating. So, it's overdue. It's overdue.
Yeah, if it was following the pattern since November, after that ABC correction, the market would take off and make new highs. So far, it hasn't been able to do that.
Yeah, exactly. Exactly.
You had back in January, if you look at January, you have a smaller version that's almost exactly what we have now since that March high.
Right.
Look at that little ABC correction back in late December.
Right.
And it looks almost exactly like the pattern we had from the last high.
Right.
And
right.
From there,
so
the market took off and made new highs. It did go sideways for a while, which is kind of what it's doing now. So that's why, as I said in the beginning, I'm always looking for follow through.
Right. Exactly.
And, to me, up until the last 2 days, the bulls have come in and bought weakness, and you didn't have strong bear trend days, but now we had 2 of them in a row. So to me, that's a potential change in behavior.
Right. Yeah. If you look at
this chart doesn't have today on it, right?
Right. That's right. Exactly. What was the close today? Let's see. What was it? Find a state. I guess it closed. Down 13. It's 27.50. It's 23.27.50 now. So down 13.25. Yeah, if you look, it's interesting. You look at this fractal in here. This could be called a fractal right in here. and it kind of looks like this in here, sort of. With this like downward.
Go further ahead. Go to like late December. You see that 2281 line where it starts?
Yeah.
So no, go up to the beginning of that 2281 line.
Let's see.
Yeah, right. And now you see that little ABC down from there?
Right.
Look how much it looks like what we just went through in March.
Right.
It's a little bigger, but the pattern is almost exactly the same.
That's right. So that's a great point. I mean, this fractal, you could call it a fractal. That's right. It's so true.
And now right now we've been kind of going sideways, except today we're for the first time we're kind of breaking that pattern because we broke down.
Right.
Back in January the market went sideways, whereas now it looks like it's breaking down.
Right. So you could take, add up all these bars right here and put them in here, and instead of this going up like this, it could end up going down like that.
Yeah.
Right? I mean, it could.
Yeah.
But that's a great comparison. Yeah. And it kind of, to me, it kind of looks like it in here too. I mean, it looks somewhat similar, sort of. It's more far-fetched than this, but the way it comes up like this, the way this comes up, now this is coming up, I could roll over down like that, right into 2281. In that area. So as an options trader, what would you do are you going to hedge yourself, or do you hedge yourself, in that kind of context?
Well, I mean, the type of trades that we put on, we normally hedge the upside, and because the market's been going up,
Right, in the recent market, that's been necessary.
Right.
Yeah.
Yeah, but under these conditions, you'd be maybe a little quicker to put downside protection.
Right. Oh yeah. I think it's a good idea to be going out and buying, VIX calls. Just as an insurance policy, for example. Yeah.
Well, in the type of trades that we do, we normally allow a range of deltas. So maybe under these conditions, you wouldn't allow as much positive delta as normal. That type of thing. There's a lot of different ways to go about doing it.
Oh yeah.
That would be one of the approaches would be to cut back on the amount of positive delta that you carry.
Right.
Or to have a couple of extra puts in the position.
Exactly.
Or, as you said, have some sort of volatility hedge.
Right.
Although at this point, if you haven't bought the volatility hedge already, it's expensive.
Well, unless you go out a couple of months, you could go out to June. You can still find, depending on what you want, of course. And go way out. Go out to the 45 strike, for example. That's cheap. It's 15 cents. Just using it as an example. That's all. Yeah.
Well, if the VIX got to 45, I would not want to be in the market at all.
Right.
At least not in some sort of delta neutral option position.
Right. Well, it would be a great thing to have those VIX calls, huh? Then you could sell them at 45 when it gets to 45. You'd be sitting, and somewhat okay. Needless to say, I don't want to say a good position, but you would have been prepared. I mean, God forbid that happened. But you know, next week will be. I think if we can get through the 21st. You know, through next Thursday, I'm thinking that, you know, if it doesn't really sell off by then, we should be okay going into May. With all the activity that's going on around the world right now, whatever. I mean,
it's been a long time since the VIX was over 30.
Oh yeah, so long, right? A very long time. Oh yeah, absolutely. But you know, again, looking at all these charts, except like gold is not, but that's starting to really. I mean, now it's up in here, starting to look pretty bullish. Oil too, but look at that, IBM. Again, I think it's important to be looking at these to see where the market's going. I mean, even if you are an option trader, I mean, because not that you're going to trade this, but just to give you an idea, some sort of deeper, you know, understanding of what they're doing. I mean, what are they buyers of these markets or whatever? Where the market's going. Cisco's rolling over. Triple M. Now GE doesn't look great. HD can't really seem to get anywhere lately. And again, we already commented about Walmart. And this is the mighty XOM can't seem to get going. Oh, there's Cat, the Apple rolling over. Tesla, that's another story. But AMD, and then, you know, but yeah, I think it's going to be next Monday, Tuesday, Wednesday is going to be critical. What do you guys think? I mean, if we can just get through next Thursday without it getting too much volatility and more momentum to the downside, then that era of complacency should start to come back between the 21st and the end of the month. It should.
Yeah, well,
what do you think?
It's kind of interesting because there's something that's happening next week that's freaking out the VIX futures market.
That's right. I
think the VIX futures expire, I think, the end of next week. And,
right.
You know, the April is in steep steep backwardation with May, and yet all the other months are in contango. So there's something that's freaking out the market, but it looks like it's something that's happening next week. Because if it was happening after that, then I think it would be affecting the May futures as well.
Right, exactly. Right. So it is something about next week. It really is. Well, I think they're afraid. I mean, this Korean thing, you know, it's not looking too encouraging. I don't know. It's looking at least suspicious about what are they going to do. It's like, you know, who's going to do what?
No, it looks like China pretty much is trying to put North Korea in its place, which is kind of interesting.
Right, exactly. Oh, yeah. And at the same token, they don't want to give it to us. I mean, they don't want to tell, you know, they still have that, seems like they still have an interest to keep it in its place, to say that, you know, for their interest too, because they don't want to see South Korea take over the whole, or South Korean politics take over the whole region or whatever.
Yeah. I mean, you know, we
right?
in the last week or two, it seems like our relationship with China has gotten much better, and our relationship with Russia has gotten much worse.
I know. Isn't that amazing? It's so true. Oh, yeah. That's not looking good. I mean, I think it's freaking out, making it freaking market participants out. I mean, on a certain level. So where the big money is, you know, people at Goldman Sachs, et cetera, Morgan Stanley, who are pushing this market higher or lower. They're concerned. So, yeah, it's just time will tell. Time will tell. So, well, I have to do. Well, I'm planning on starting doing this every Thursday, and getting deeper and deeper into it. I think it'll be fun to do, and as the market moves forward, we can all. I mean, everybody can share what they're looking at. I think it'd be a great. I think it'll be fun. So, on that note, we've been going about an hour now. So, it's great meeting with you guys. Do you have any further thoughts?
I can tell you, it's always tough to get people to participate. That fear of public speaking is one of the big fears.
Right, absolutely. We'll have to try to break that down in here.
Trading Group 2, Tom has the same problem all the time. He can tell you.
Right, sure. No, that's just it's so normal. I mean, there's nothing unusual about it. I know what you're saying. It's so true. But I'll bring, I've got so many more charts to show or whatever, and ideas. Just barely cracking the surface here. But I thought that was appropriate to show this, the first time this week. So let's do it again next week. All right. So until then, I really enjoyed it. We're going an hour right now, and I don't want to take up any more everybody's time. Thanks for coming and listening and participating, and we'll see you again next week. I can't wait to see what the markets do on Monday, Tuesday, and Wednesday. Be great to be prepared for the downside, just in case it comes. Okay. Until then, have a great weekend, and take care.